All right, all right, all right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm happy and grateful for each and every one of you being here with me as we take a look at the technicals and the fundamentals to see what we could take advantage of in this awesome, awesome Forex market. So without further ado, let's make sure that we turn off any and all distractions. Excuse me, grab a pen and paper for notes, and let's make sure that we do an awesome job of closing out the week and participating and engaging. So as always, if you can hear me loud and clear, drop me a one in the chat and we can get going for this evening's session. All right. Thank you. Thank you. Okay, so quick sound check is all done. So let's jump into the charts, everybody. Quick, we'll take a look at trading economics, and we can see right here, Japan inflation rate hit 7.5-year high. So you can see consumer prices rose by 2.5% year over year in April, the most since October 2014 after a 1.2% gain in March. So, hey, it's a global thing. Inflation is crushing everybody, even in Japan. We know this is important, right? This report, because we know that they have been holding pretty steadfast when it comes to their monetary policy, keeping it loose, letting the market forces play out, and they've had so far no interest in raising interest rates. So we'll continue to watch that closely. We can see U.S. futures rise, S&P 500 nears a bear market, right? So things are getting a little tight. And we've got wide trade gap, stocks rebound. UK consumer confidence falls to a record low. They're feeling the squeeze, right? When you talk about the Bank of England, hey, they were saying that this was going to happen because such a shock, right, to incomes because of how high inflation is. Okay, those import costs and things like that going through the roof. So if we take a look at investing.com, stock market today, down because of 8 weekly losses as tech sell-off continues, right? So your tech sector, those high-risk stocks, okay, those usually take the hit the hardest oftentimes in situations like this. So this here shouldn't surprise us. So the good thing in the Forex market, you can buy and sell, right? You can take it on the way up, you can get it on the way down. And that's why I love trading this market. We can see here that the 10-year, right, your yield is falling, right? It's starting to fall. We know it topped out, got up there pretty high, and now it's starting to correct, right? I know a week or so ago, we got into talking about bond yields and things like that, but a simple way to look at it right now for tonight is you see this correction happening, okay? So typically it's the US 10-year. A lot of investors watch this closely, and you can see the correlation, like especially with the dollar. So you think simplest terms, right? 10-year yield up, dollar up, right? If it's going down, dollar's down. And you can look at this as a solid correlation. Oftentimes, when you look at your 10-year bond yield and you look at something like the dollar yen, so you can see how this is starting to correct to the downside coming off the highs on the 10-year yield. And if you go to something, you can look at the dollar index, right? We know that's still correcting a bit to the downside, had a bearish day. And then if you look at something like, it's oftentimes a pretty good correlation with the dollar yen, right? So you look at your 10-year, and typically, right, because the question is always, well, which one's leading? And for what I've seen, oftentimes it's the bond yields that's the leading indicator, right? So you see them top out and start to turn over, you'll start to see, right, the US dollar, Japanese yen pair is kind of a lagger. So that's a little nugget. So I hope you guys are listening to that, right? Drop me a one if you heard what I just said. That's a nice little fundamental nugget there that you can add to your bag of tricks when it comes to trading in the market. Just another key data point that you want to always take a look at. All right, is keep an eye on those yields. So over here on TradingView, I keep them. I've had this for the longest. That's why it's just quicker for me to go over here. But I can look at the German government bond yield. We know the largest player in the Eurozone is Germany, so you can track on that. Okay, and then here I've got the 10-year gilt. Okay, for the UK. So just keeping track of those bond yields. I'd like to take a look at those in the morning, especially I've swing traded primarily, but back when I was really doing a lot of shorter term day trading, I would love to get up in the morning and take a look and see what happened with things overnight when you talk about the yields, especially like the futures and stuff like that for bonds. But for right now, hey, if I see the bond yields are up, that means oftentimes, not all the time, but oftentimes you'll see the dollar is up. Okay, so key data point to keep an eye on, and you can see here it's turning over. From the daily, we had marked this up quite some time ago, and you can see that, hey, it stalled a bit, but then it started its downward path. So the UJ has been moving to the downside. We got a bit of a correction here that's happening, but it's getting close to that D extension on the US dollar. So we'll continue to watch things closely there. Good evening to everybody who just joined us. Let me make sure that you have control over your microphone. There we go. You're all set. So this morning, we were looking at some setups. We were looking at the, and hopefully some people took a shot at them because they played out a little bit this morning session when we were looking at the Euro USD. And we were looking at a further upside move. And you can see that it started to push, right? Held at that zone and continued to move to the upside. So if we continue to see a dollar correction, we know we're getting some hawkish sentiment, possibly 50 basis points in June coming out of the euro. It started to get a lot of pressure to try to help combat inflation. So we'll continue to watch that. We can see it finally pushed up a bit out of that zone, right? We were all looking at this range, this consolidation area, and we finally got that nice bullish candle to break it. Now it's pulling back a bit, but coming off the low here, that C, right? That was a really good move today, coming out of the zone. So it's 100 pips on that move, right? On the US dollar, and you can see that you watch it closely. If you don't like long swing trades, then you just play the levels. But like we always say, the key is having that direction, right? We know we haven't gotten a daily 382. We know that for the longest time, there's been a ton of downside pressure ever since the war broke out on the euro. But it stopped right here. It stopped cold at this 103.41 monthly level. So it's just a matter of, is it going to range or do we continue to see strength? That's mainly gonna until you get the rate statements coming out of the ECB next month. This is more than going to hinge on how much does that dollar want to correct, right, to the downside. That's what's gonna drive this pair. So just continue to watch this one closely. But that was a good move today, coming out of the morning session. Beautiful pullback there. And we pushed up. So we expect, right, if this sub fib is going to hold true, we expect potentially that D extension to get hit on this sub fib. And then there's your 4-hour 382 there, and then your daily 382 is further into the zone. Okay, which if price pushes up this high, I'm looking to start to get back short on the euro, down on the on the euro down to parity. So we're in a down retracement zone here. That's what we're looking at right now. A down retracement zone, just like on this last wave, a down retracement zone, and then it got short. Okay, so that's where we are on the euro dollar. That was a nice little play. Any questions on the euro dollar and where we are? So still overall bearish, big picture, but we seem to be in a retracement zone where price is looking to pull back. All right, gonna assume we're good. The next one we took a look at this morning, which waiting on the pull. Yep, waiting on the pullback. I know a lot of people in the group are waiting to get short at a high price. Not a bad way to look at it at all. The pound played this one this morning. This one worked out pretty good, right, on the U-turn. So similar look off the 4. Look at that. but it's just getting going, right? Similar look, euro dollar, pound dollar, similar. There was a nice push up, then we got a correction. But off your C, look at that. Doesn't look like much. That's 163 pips. So we'll see if we can continue for price to move up. So if we move up to that 382, right, 345, right, just to the 382, 61.8 deep correction, 496. So we'll continue to watch that one. So this one's in the middle of an ABCD wave pushing to the upside. And we'll see if we can get that one to finish out. Anybody long on the pound dollar right now? Anybody take that U-turn?
No, but Mary here.
Hey, Mary.
If you look on the daily, I find that it was stalling at a monthly level. Around 1,254, I think. Yeah, I see for about 3 days. They didn't go past that level.
Yeah, no, it's ranging, right? Yeah. Kind of just ranging. So we'll see if it continues to move topside, eventually break through that. But again, that's going to hinge on that dollar. I was apt to take it because of the UK got that positive jobs data. Everybody was talking, they're still talking stagflation, which it could be headed that way, but that's why those job numbers were so surprising, because when you're looking at stagflation, when you're looking at those type of conditions, you usually don't see the job numbers like that. And they still may be headed that direction, but not yet. That was a little sunshine amongst all the clouds. So yeah. So it was a good little move today. Yep.
I got a question. So sure. I know one thing when I look at news and what I get confused on is what is important and what is not. Is there a way if a chart can be created to say, this is the news that's relevant, and if you see this, it's really not relevant? I mean, I know it's orange and yellow and red folders, but sometimes the red folders don't really mean nothing. So it's like, over the past couple of weeks, it's like, okay, pay attention to the retail sales, but it's like, when should I pay attention to the retail sales and when should not? When it doesn't matter. Is there?
Oh, that's a great question. You always want to. You always want to have it on your radar. It's just whether or not if it's going to have a strong impact on the market or not. But you always want to have that on your radar, especially during these times. What happened was the retail sales numbers came through surprisingly decent, because you're watching that, right? What are consumers still buying? We've got high interest rate conditions, because you always have a period in the cycle where you always have inflation, but you want to keep it under control, right? So that's just natural. That's the market. So there's a period, right, where inflation is going up, but consumers are still buying. And actually at that point, in the very beginning of an inflationary push like we're having now, it's cool for the companies, and the stock market is still benefiting. Why? Because the bottom line is increasing a bit, because the cost of things have gone up, but consumers are still buying at a pretty high rate, right? So that's why those retail sales are so important, and they monitor that. Okay, so that's always going to be an important data set. It might not be as impactful as it is in different times, right? But it's very, very important. But then it reaches a time where where you're getting now, and why you're seeing the fear is because you got a hawkish Fed raising interest rates, borrowing costs becoming more expensive. Now, think about it as a company. Now, you can start to see data where consumers aren't buying as much because things are now starting to get too high. And then the cost to produce the products are starting to get high. So now you got a double whammy. So then that impacts the bottom line negatively, which is why you're seeing what's going on in the stock market now. Things are starting to tighten. Okay, so it's always an ebb and flow. It's a balance. It's never an exact science. But this is why all of these reports are constantly, because they're looking at the overall health of the economy, looking at what customer sentiment is, looking at when you see manufacturing reports and things like that come out, because you're looking at, hey, is the cost to purchase things increasing or decreasing or holding? And you have to look at it from a corporate side, a manufacturing side is, hey, what's the cost to produce these things? Is it going up? Is it holding steady? Is it going down? Right? And the stock market pays attention to that because that falls right in line and it has a direct impact on the profitability of a company, right? And that's why you buy stocks, right? You want to see that company continue to grow and that stock price increase because you bought it low, you bought the dip, and you want to see it continue to rise. Well, now you've kind of got the inverse of that because of what inflation and everything is doing to the market. So we're in some testy times. It's just so yeah, sometimes you will have like your non-farm payroll. Sometimes they can be explosive, sometimes they're not, but you always want to pay attention. You always want to pay attention to those reports. You never, and there's never a time where you don't. So that's a very, very good question, because you're right. Sometimes it just flatlines, right? It's a dud, but you may not. It's a timing thing too, because the report may happen on a certain day, but after the investors and everything digest and wrap their head around that key data point and several others that they may be looking at, you may start to see the impact of that, a week down the line. So it's not always immediate, but you always want to keep those on your radar. So great question. Yep, just like Joy, just like Walmart. So I'm glad you said it, because it's kind of where I was going. You had decent retail sales, and there was some optimism about that. But then as soon as you saw the Walmart and the Target numbers come out, and the big misses that they had, it just put a damper. It totally wiped out any short-term positive momentum on the market, and that was a hurt piece there. So
yeah, the only reason why I say that, because I remember before he said that about Walmart, I guess it's like the retention of information that you guys give. I need to start putting in categories so that way I can retain it, because it's like I feel like, oh yeah, I forgot. So I remember reading something that's like just like how you were saying about the S&P, because I didn't really understand the relevance of why we got to keep up with the S&P. Well, the S&P is a mixture of a whole bunch of business and stuff, and then because that business make the money, that makes the market move. And it's like, even though we're not trading stocks, then we still need to pay attention what the stocks moving in the market to see where prices is gravitating to, is what I was reading, how I was understanding this article. It's like, if you see the markets going this way, because I'm like, well, what the stocks got to do with the currency? Because people still out here buying, because I see FedEx and stuff and out here rolling. But it's like, okay, well, the stocks is the products, that's what people buy, and the foreign concern is the money, the currency is the money. So that's what get it moving. So I was trying to correlate the two in trying, I just want to make sure that I'm not overthinking, where I'm going to, where if I see when price is going up and price is going down, or if it's a fake out. So I was just trying to relate all the markets together. That's it. I'm sorry.
Yeah, no, I don't need to apologize. It goes hand in hand, because think about it. If the economy is healthy and the stock market is booming, if I'm from another country and I want to play in the US stock market, what do I have to do with my money?
Get US dollars?
That's it.
Okay.
That's it. Right? That's it. That all has an impact on the dollar. And then when you get into those risk-off scenarios, the dollar is always the wild card, because it can play both sides of the coin, right? We know that it could be a safe haven and risk-off scenarios depending on what the scenario is. Why why is the market moving to risk off? So on and so forth. So and it's the world's reserve currency. So you don't have to be a master of the stock market. You just want to look at the key data points, like, okay, the S&P is down. You know, what does that mean? You know, the bond yields, you know, are up and down. What does that mean for the US dollar? What does that mean for currencies? So it's just all these are, the way you think about it is just, these are data points. These are things, you know how we always talk about from a technical perspective, those confirmations. It's the same thing fundamentally. It's the same thing fundamentally when you're trying to determine overall direction on the market, and primarily for swinging, right? When we swing trade and we get in these setups, like how we'll set up some markers. That's a great way to put it. They're just markers. You know, like it's like some people will go, if they're trading and they'll look at like, because in the S&P, you know, when you really get down to the nitty-gritty of it, when you look at the S&P, you have companies, right? These companies, but then those companies break down into sectors: healthcare, tech, energy, you know. And so when you look at the breakdown of the percentage of the S&P, it can give you good gauges. Okay, well, what's going on? Oh, the energy sector is booming, or like they keep saying, you see it on investing.com, like, well, tech continues to sell off, you know. And then you look at it like, well, wow, those tech companies are a pretty good percentage of the S&P, so it has the ability to drag down the S&P because of what it represents. You know, it's kind of like the DXY. We know that the euro is heavily weighted with the euro, 52% or so of the DXY. When you look at the basket of currencies that the dollar is pegged against, it's heavily weighted with the euro. So you see that inverse effect between the DXY and the euro. So it's actually really fascinating, but you don't have to get so deep. You just need to have, okay, a couple data points that I'm looking at, you know, especially when I'm trading currencies, looking at the S&P, looking at your bond yield, looking at interest rates. We know that's the number one thing in regards to impact. Where are the central banks in regards to monetary policy, and looking at inflation, right? That's why when you come to pages like this, you can go down, like here we're on the home page, and you can scroll right down, and they've got in the United States these key inflation rates, jobless rates, interest rates, GDP, key data points, right? That people take a look at, looking at the overall health of the economy. So it takes a little while, but you'll get it. And the way you're communicating with me, you're getting a good grasp of it. You're getting a good grasp of it. So yeah,
I got stock into my company, so I've been trying to like I told him, I don't want to quit. I invested in your portfolio. I invested on my portfolio with your company, and I want to see this company succeed. And so that's what got me to thinking to start looking to understand what the S&P really means. So yep. I know that I was following it because I was told to, but I didn't understand why until I seen this article, and I didn't know if the source was valid or not. So no, I appreciate it. Thank you.
Oh yeah, you're welcome. It's always the why, right? It's always the why. That's the whole goal here. Is just why is it that way? You know. So it's pretty fast, and I'm big on it, and doing my best to help people become aware of it, because sometimes for some reason we think it doesn't affect our everyday lives, and it does in a major way. So yeah, that's it there. So that's the pound dollar. Great conversation. I just posted the dollar Swiss in the Telegram for everybody to keep an eye on, right? We've got that push down. Look at that. Look how strong that's been, that risk off. I mean, the Swiss National Bank came in and said, you know, they'll do whatever they have to do, to combat inflation. And you got a market reaction from that too, not just risk off, but they just said that a couple of months ago, and you didn't get nowhere near the reaction. So different month, different time, different scenario. You've got you've got a reaction that happened in addition to the Swissy being a safe haven, and we've got a risk off scenario there. So we've got this push down in this correction, but if you come down and you take a look on the 1 hour, is where I spotted it. You're sitting in the zone for your potential 80-20 play here. Now you can look, this is a key level that it broke, this 97.34. So you can even wait until it closes above, right? Say, hey, if it breaks it and closes above and holds, then I'll look to buy to the high price. If not, you guys know what to do. You guys know what to do. I don't know. This could continue long from here. It could push up and retest this support level, but it's made a decent correction. Again, it's all going to hinge on what the dollar, how deep that dollar wants to correct. But I am looking, for me right now, I am looking to buy this correction. If I can get it to break above this 97 and hold above this 97.34, that's my game plan on that. And so I put that in the Telegram for everybody who wants to monitor it closely and take a shot at it. All right. Always use your confirmations and proper risk management. Any questions on this dollar Swiss? Nope. All right, cool. I also posted a Swissy yen setup. Let's see if I can pull that up. This play here. So A is in session, moving a bit sideways. We may push up to test this 131.87, but we posted because it's in the zone. We posted because it's in the zone. So just continue to monitor it. It would be beautiful if we end up getting a push up to that level and it holds. That'd be great to look to get short. But just continue to watch it closely. Know that it's in your 118, 127 zone after a shallow retracement, and you can get that correction back to the downside. Any questions on the Swiss yen? Okay. And I'm going to go back and take a look at this. Set a limit order and switch in because I didn't make sure I was on the right chart. I didn't. That's all right. That's all right. You should use the proper risk management. So we'll see how it goes. Right. So this may push up and test that level, which is cool. Let me, the cat Swiss is one we've been keeping an eye on. We're looking for a correction, and it's still right holding. Right. So we push down. We're in that zone, and we'll see if we can get that to U-turn and start breaking some trend lines for us. So keep that on your radar, because that can be a pretty good move to the upside if we can get that U-turn. All right. Any questions on the CAD Swiss? No. All right. I want to take a look at yeah. So this is another one. Continue to watch this Aussie dollar move. We have gotten a correction that we were talking about. See if it can continue to push up, test the trend line, right? Push a little bit higher, and then I want to look to get short on that. Okay, want to look to get short on that. So just continue to monitor this play to the upside. What does it look like on the one? It's probably pushed. Yeah, it's a deep retracement, so it pushed out of there. So we're in this scenario where A was taken out because of the deeper correction, which is fine. We're all aware of that now and how that goes. Got a deeper push in the 4-hour zone. And if we run our fibs to the upside here, like so, we've got a D extension that's been hit. So kind of plays right into what we're saying on this this 4-hour chart. I would like to see it push up in the zone, but I'm gonna draw this trend line to the upside like so. Like that. Let's continue to watch that one closely. I need that just to push up a little bit further into the sweet spot. And then I'll be looking to potentially get short on that. Absolutely. We can look at the Aussie Nzd.
Benny, I'm sorry, I'm talking so much.
Sorry.
That's okay.
Go ahead.
I was just saying, I've been doing that lately, marking it up and down, and I noticed that it's a pendant I noticed.
Yep, I'm listening to you. Go ahead.
And so what I've been paying attention to is which trend line it breaks out of, because if it's above the X, it's going to be a buy, as long as it closes above it. And if it's down, I can confirm it as a sell. But then when I looked into the pendant, I noticed that there was a specific pattern. And I've been meaning to ask whether or not, if I'm looking at it like that, the ABC correlation within the pendant. And I don't know if I'm asking too much.
No. What you're doing is you're starting to turn into that pro trader, right? You're starting to see things, right? You're starting to see it all. Yeah, and I'm proud of you. You're starting to see it all come together. So a lot of times people they learn about it because it's not oftentimes when you learn how to trade from a bunch of different sources, it's not a systematic approach. So it's like, man, I just learned about a head and shoulders. I learned about a flag and a pendant. I learned a little bit about the fib, moving averages, MACD, and it's like, man, how do I bring all of that together? How do I bring all of that together so it can make sense for my confirmation? So you're starting to see, those patterns, those flag patterns, those pendants, and what you do is you keep it within the context of your Fibonacci sequence, and it becomes really, really good points of confirmation for you. Everybody sees it differently, but if you have a good foundational structure, whatever you see as a trader, right, that other people may not see the same, you can still make it work because you have a strong foundation. So everything that you're saying is okay. So right, if it breaks above your X, you're looking at the potential for a further upside correction when you come to these cross points like this. So that's definitely possible. That's definitely possible. I needed to get higher in the zone anyway. And how you eventually decide to set your trade plan off of that, only you can do that if you're looking at flags and pennants and things like that, and how you want to play them. Okay, so no, you're good. You're doing well. You're doing very, very well. Sure, nothing wrong with looking at that. Nothing wrong with looking at things. Once you continue to develop and you say, hey, I like, when things move in channels. So you can get into all of that. The way we keep it simple and basic in here is because we feel like it was best for us when we had that strong foundation. Then we started building, things on top of it, like your moving averages, like a 20, a 50, 200, and then you can start playing those things if you want to for extra confirmations, or you may get to the point where you want to play, learn how to use the cloud, right? And how it functions and the role that it can play in regards to your trend trading and things like that. Okay, you can see here, even on this 4 hour, this is looking to push the break above the cloud. I don't know if everybody can see that good, but let me take this off. This price action here. Okay, so you can see how this is moving up, and we have a bullish cloud coming into play here in the background, and this is about to break the cloud. This is the lagging span that needs to come and follow it. But this is telling us that, hey, you may get a further upside correction in the zone, which is absolutely fine. So you can start to build on all of those things once you understand, hey, structure, support, and resistance, trend lines, right? What's their roles? Learning your fundamentals, Then when you throw this stuff on top, that's when you just become a consistently profitable independent trader, and you're on your own zone in your own lane, and then you're good to go from there. And nobody can do it exactly the way that you do it, or what you may like. So you can't see it that good. Maybe I'll say that. Let me pull this in. So you get a good foundation, and we formed a group because we felt like man, that's what people are missing. You learn just this smorgasbord. You can see it here. Here's that cloud, and you can see it starting to push, and you can see you've got a bullish cloud up ahead, right? So you get a strong break there above the cloud. You get your lagging span. This is all this stuff is. We'll do some lessons on it. It's just a series of moving averages, really, is what it is. These are moving averages that form your clouds and stuff like that. But you can see it's trying to break. It's trying to break above that cloud, so we can have the potential for further upside correction, which is what I want to see anyway. But although all these things, right, they get so confusing and crazy when you don't have a solid foundation that you're trying to build upon. So that's why we kind of leave those out, and then we eventually, as we continue to build content and move in that direction, to help people understand how these different confirmations, right? Just like you have your data points, right, and your fundamentals, those different markers, like you said, it's the same thing with using moving averages and different indicator systems. But you don't want to have 50 million indicators on your chart, and you want to have a clear understanding of price action and market structure before you really get into all of that. Everybody follow him in that. Drop me a 2 on the chat if you guys can get that. So Antoine, what is that on the Ichimoku cloud? Is that what you're talking about? Or just moving averages, period? Yeah. So yeah, that's why you see the charts besides your trend lines and your fibs. Right now, your fib is technically, the indicator that we're using, and not too much anything else. You have where you could put, like we taught in the very beginning, how you want extra confirmation at key points of entry, how to use your stochastic, right? So using your stochastic indicator here, right? Oversold, overbought. Okay, you can use that for extra confirmation. But all of those things, the reason why we kind of stripped it out is because it's just like let's stick to the nuts and bolts to help people get the repetitions that they need to develop the spatial intelligence, that they can do top-down analysis and see the charts properly. Then you can stack and build all of that stuff on top of it. So just a slow and steady systematic approach that we like to teach, take towards teaching. So, and I mean, I feel like we've helped quite a few people shorten their learning curve a bit, compress some time frames. So we'll continue to build on it. Kimberly, check your spam. Your spam folder and things like that, because when you first sign up, all of that should be sent to you. So you should have it in your email. If not, just send us the forextraderoom@gmail.com. Shoot us an email, so we can make sure that we get it out to you. But double check your spam. You're welcome. Antoine, that's okay. That's okay. Can't find an unmute. Maybe I didn't. Hold on one second. That might be my fault. Yep, there you go. You should be good now.
Oh yeah, okay, I got it. Thank you.
Yep, you're welcome.
Yeah,
you're welcome.
Just the moving average in general, just the indicators. Taking the courses, okay. What I don't know, and y'all apply. Present a lot of new things. And for me right now, I'm like struggling just with the Smart Trader platform. Period. I'm like, oh my God, this is so much new information. So the more y'all guys can give, the easier it be for me to understand in this whole system, my whole journey. You know what I'm saying?
Okay. Yeah. What's your struggles with your Smart Trader? Just getting used to the functionality?
Man, just because I watched you do it, y'all do it so much. So now I'm trying to like make mine the same way, but like getting making all the pairs, my workstation, then trying to figure out how you do the bid, the sell, and just playing with it to try to figure out the program itself, and then at the same time trying to build my trading plan on what type. You know what I'm saying? It's very overwhelming, but I take a step back and just take my time. You know what I'm saying?
I got you. So you want to trade off this platform too? I primarily don't trade off this platform. I still use MetaTrader because I go on my phone. I can do it from Smart Trader too from the phone, but
no, I'm planning on using the MetaTrader, but I got the demo account with the Smart Trader.
Right? Oh, okay. So you're working with the demo account right now. Okay, I got you. And learning how to plug things in, place your orders.
Right.
Okay.
It's totally different from the trading view. It's just like, whoa, this is crazy.
Yeah, we could definitely spend some time on that going forward. So thanks for letting me know that.
Thank you.
Yep. What we looked at was it that I kind of want. What do we want to see? Somebody wanted. Did we look at the Aussie Nzd? I think somebody wanted to see that, right? Yes, no?
Yes, sorry.
Yeah, okay, that's
I was trying to get unmuted. Remember I had there was an 80-20. There was an 80-20 on the daily.
Oh, on your daily chart?
Yeah.
Oh, off your low right here. You swing it off your low?
I have to look back and see. Hold on, let me find it. I entered from around 1.02775, somewhere around there on the, this is back in 2021, October 2021.
Hold on. On the Aussie Nzd daily?
Yeah. Let's maybe make sure that I have the correct here, but yes, it should be.
we cover a lot of pairs, so
it's the Aussie Nzd, and I had posted it on Facebook.
When? Today?
No, but could be Monday or last week. I can't remember.
Monday or last week? I have to go back and look at that. So you had it right here?
Oh, hang on, because I'm looking at yours and mine the same time. It's about October 2021.
Right, October 2021, right here. So you start running it from here,
around
this area.
Yeah.
Around this zone. That's the low. That's the next low right there. They ran up to this space.
I think it would probably be the same as the one that's there right now.
Okay. Yeah, we didn't get it. I mean, we didn't get a 382 here. It just held.
Right. It's about
yeah. So this is the CBD
posted
bag
as
that
an 80-20.
No, I see it. The key is it's getting close to this D extension on this main fib too. It's not too far away, but off this these sub fibs running up long, you do have it.
So my trend line, the trend line broke.
Oh, right here, up in this area.
No, I think right at the end, yeah.
Right
you can
here
try
at the
to
end.
see. Let's see if it's the same as mine.
Okay, let me That's what I got right there. It's moving sideways. You were more aggressive on your trend line?
Yeah, I was probably a little more aggressive.
Yeah, usually more. Yeah, because I see the move down off the high, and then so on your lower time frame, that looks like a pretty sizable move that would have broke trend line for sure. But now it's just moving sideways. So it's one to watch and keep an eye
Yeah, I've
on.
never played an 80-20 off the daily, so it was just wondering.
Oh yeah, those are monster moves. those are
So
those are
if it
monster
breaks,
moves.
if the trend line breaks, we
Mhm.
can do the B2C move from there.
Oh yeah, because you never got a 382. So even if
Yeah.
you're thinking just levels, if I break through this zone, right? So if I highlight this zone here and we start to get a correction to the downside, then I have to look to see what the catalyst would be. But this makes sense that they're both moving sideways, considering what's going on in the region. But and they're both commodity currencies, right? And oftentimes you do get this with the Aussie Nzd. But if you get, where you get price to push down, kind of give you that break below that zone, especially with a close.
Yeah.
It may pull back a bit. But then even if you're thinking 382, just zone to zone, which comes right in line with that. And we know oftentimes when you get that inner trend line break, price likes to gravitate towards the outer trend line, right? So it's just kind of like the natural flow of things. So that's a good one to watch. If you come down to the 4, you can see how it's just stalling, right? So I definitely see your idea. You can see I say I've got here neutral to bullish, right? Better pairs to trade because it's not breaking through any levels. But if you do start to get that breakdown, then you think, okay, well maybe that daily time frame is starting to take over, and it is going to start to move to the downside. So there's definitely one to keep an eye on. Definitely one to keep an eye on there. So thanks for bringing that one up. I'll watch that one too because it's going to break out in one direction or the other, right? And I would love to be there if it decided to go short. So I'll keep an eye on that. There's Aussie CAD too while we're at it. I think it's the Aussie CAD. Maybe not. But while we're looking at it, that's holding that support. It's giving a good push. Look at that. Look at that. Let's continue to see what happens with oil on that. You might get some upside momentum. That's not the one I was looking for though. But while we're at it, I mean, we've got it drawn for the correction. It's come all the way up off the beat boundary. Pretty good. It's 115 pips, 70 pips now. But I would like to get short on it if we get a decent high price. So that's kind of what I'm waiting on with that. So as I put here, look for price to move higher with the break above 89.74. And it did, kind of moving along it, but it broke bullish. So I need to get it up here in the zone up against that trend line and look to get short on that. Got a question on Bitcoin. Bitcoin is selling. You're going to have corrections, but it has been to the downside. Okay. So it's just, it's stalling a bit now. But it's been a pretty sizable move. We may be in line, right? It's holding at this beat boundary. Maybe it's ranging. Maybe we start to get a correction. Overall long-term bearish, but maybe we're getting to an area where it's correction time. Let me see on the 4. We got a new low. So at this 29,284, you guys see how it broke it, and now it's right back above it and it's moving sideways. So you got a lot of action going on at that level. Okay. So that zone is holding pretty good. So maybe you get a correction back up, but I don't want to buy that though. I don't want to buy it because what's going on in the tech sector, I don't want to catch the falling knife, if you guys know what I mean. So I would rather just wait for it to make its way. It can push that way. Now we start breaking the trend line, because that's a pretty conservative trend line. we get a trend line break and a break above 41, 44, then we can look to maybe, okay, maybe we're starting to make a U-turn, but I'll also be checking the market sentiment on that and seeing how the tech sector is doing at that point in time. But any push up, I'm looking at it right now as just a correction for a continuation to the downside until something changes with market sentiment overall. Okay. See, that's your 4. So maybe we get that push, but I would like to see it. I would like to see it correct. So I'm still overall bearish. I'm not looking to try to play any counter trends to the long side on it, just because of what's going on with the markets right now. Any questions on that? You're welcome. You're welcome. So let's look at as we wrap things up. I want to take a look at any. Matter of fact, I don't want to do what I want to do. You guys have any pairs that you want me to take a look at? I don't want to take up all the time. You know, I almost did. Sorry about that. CAD yen. I bet. That's it. CAD yen. That's it. You guys have had enough. All right. Look at the CAD yen. Having an indecisive week there, huh? All right. Strong bearish right now. Look at this here. It's holding up. Because you got a strong CAD overall, but you got the fluctuation in the oil price. You got risk off, and it's a safe haven. So you can see how it's just stalling. If you take this off, that's just sideways, really. Right? We got a lower low, lower high, lower low. Could be a lower high. That's going straight across, but it's taking a sweet time right now. So we're still holding below trend line. Joe, you short or you long? Long. All right. We'll see how it plays out. You got your risk management in place. This is where we are on the daily. Okay. All right. See that? Starting to get a bit of a channel going, but we'll see. We know we don't have a 382 target. We know all about that rule. So if you look at it, we're structured to the downside. But see, that's your 4. So we're still structured to the downside, but that could change, right? That could change. This oil's been going so back and forth. That could change in a hurry. You know, it seems like any small sign of positivity is swinging the market. It's kind of, what do they call it? Some of the guys that I know that felt like it's been a wash machine today. Things are just washing, going all over the place, back and forth lately. So you could get some upside on that, but we're structured to the downside now, though. We're holding below 100.14. See, sitting right around this. This is a daily. This is a monthly zone here. Okay, just like that. So we'll see. Maybe you get it to go sideways. Just starts moving sideways from here on out. Don't know, but just monitor it closely. The lottery number no one wanted. Just continue to watch it. That's all. And hey, if it's one of those things that's making your forehead sweat or you're constantly thinking about it, close it out. Close it out. Live to fight another day. Live to fight another day. When in doubt, close it out. All right. In these type of situations where you got a pending order that happened by accident, just go ahead and close it. We know win percentage isn't the number one thing, right? It's not the number one thing. So that's the cat yen. Any other pairs? No. All right. Well, I'm gonna take a look at this NZD USD setup. Got price reversing a bit back at this 63.83 level. Makes sense. Market moves in waves. Okay, we see where the daily D extension is. It's closing in on it, but broke a level, retesting a level. Okay, we talked about that. So now we come here and we look at the 4. That's been beautiful. So if we get a further upside correction, we'll see what happens with that dollar. If the dollar continues to move to the downside, you're going to see this make its way right on up to that 382. The 63.82, we get that break above it and holds, then it's a high probability chance that we will continue higher. It's a big mover. It's 170 pips almost. 339. So continue to watch this. If you get, we already, let me zoom in. You already got it. The break is just moving sideways, but see if you get a nice bullish candlestick, convincing candlestick to break and close. This is going to be a high now on this 4. It's a high now anyway, right? You put your resistance in, look at that. So if you break that high and you get a close, then we may continue bullish to 382. But that's just a classic swing play, right? That we always have on the radar to play. We spot those. New AB boundary. Okay. So just continue to monitor that move on the NZD USD. And we'll take a look at the New Zealand yen. Same thing. It was a ride, right? What was that? Is that coming up on 2 weeks ago now, where we said on the Saturday, hey, all of these yen crosses look the same, looking to get corrective. That's exactly what they did. So that came down off the high, this low 708 pips off the low. Okay. And I don't know, I like that. I like that setup. I like that setup. But this is, when you look at your New Zealand yen, this is, when you're talking about trading currencies, this is a good data point. When you talk about, this is a really good risk on, risk off pair, because you have the New Zealand dollar, which is a heavy commodity currency, right? Number one commodity being dairy, versus the ultimate safe haven currency. So when it's a risk on scenario, you look at, oftentimes you're looking to buy, okay, that New Zealand dollars. We know there's different variables and things like that that can come into play, but you ultimately look to get long on this. So right now we're bouncing back and forth. So we come in and we take a look at the risk appetite, and we look at the indicators, and we look at the VIXI, and we're at 19. It was up above 20. So if you continue to see, right, the VIXI, the volatility index start to simmer down and start to drop off, and we start to shift into somewhat of a risk on scenario, you'll see this continue to climb, right? You'll see that continue to move up. We know that they've had what, 3 interest rate hikes, New Zealand. They're looking at more to come to help fight in inflation. So they're not scared to do it, right? That's something that's a strong part of their monetary policy right now. They definitely haven't been a laggard in that space. So we're at a 61.8. This is a daily support that held. So you gotta break. I take this visual out so nobody thinks that that's a, right. So that 382 has already been hit. We're right at the 61.8. Now this here is a level of resistance. That's a swing high. So if things start to simmer down a bit, you can see that continue to get long. Now this is a long-term, right, setup. Okay, that's a long-term setup like that. Okay. So you see if you can get bullish continuation on that to the upside. So that's coming off the daily. Now, a lot of times this is all the times where people get confused. Like, what? You got a down fib on your lower time frame. Why? Because price has been corrected to the downside. That's a long move, right? Off this high, 796 pips. Got corrective. So of course, it's still in a down AB fib. But price, if it's meant to get long, coming off that daily level, which you see right here. So this is the same thing on the 4, like that. It's going to continue to make up ABCD waves and eventually take out this down fib. Okay, now you know you got price reversing. So sometimes that confuses people. And what I'll say is, if that's the case, and you've looked at the daily time frame and you're thinking, oh, that hit a 61.8 up against daily support, I'm bullish now, then that's fine. Just take that out. If you're thinking I'm long NZD yen, then you take that off and you say, okay, it becomes like this. That. That. And you could get more aggressive, right? Especially if I took it down to the 1. You come to the inside. So if we back this up a little bit and we say, when you hear us say, we like to try to figure out direction off the higher time frames, the weekly to monthly, and I want to find my higher, my low price. Okay. I want to find my higher, my low price on my daily. Then if this 61.8, this level, this buy zone represents potential low price for you, then you can say, you know what? Now I'll go down to my lower time frames, look for a trend line break. And yes, price is moving down in a corrective fashion, but now it's in my sweet spot. I want to get long. So I'm just going to deploy my fibs like that. So it's whatever, right? We're going to give you the foundation, but then as you get more experience on the charts, it's going to come down to what visually makes sense to you, right? And your own trade psychology. So if you're thinking, I'm bullish on the NZD yen, then you're only looking for biceps, then just deploy your fibs in a bullish capacity. My correction, I think, is over. It's at my low price. I'm looking to get long. So I'm going to start looking for trend line breaks. And when I get those swing lows and the swing highs, I can then deploy my fibs and I can start getting long. Does everybody see that? Yes, no, maybe, somewhat. Hey, I'm gonna watch the video over. All right. You know, so it's whatever makes sense to you. So, you know, this here, running this fib from the downside doesn't confuse me just because I've been doing it for so long. But if you're new, you're like, what? I'm bullish, I'm bearish, just put like, you know, then just do this. Hey, I've got my low price on my higher time frame. I'm looking to get long off of this support, which is right at a 61.8. Then I'm looking to deploy my fibs in a bullish capacity. And that's going to be my bias until the market tells me otherwise. Okay. So I'm trading this ABCD. I got an A6 pullback. If I'm looking to be in and out of this trade and not hold it long, then I'm just going to play my smaller fibs. And then that's my next TP, because I got A, B, C, gave me an A6 pullback with the wick. And then that's going to be my next D extension. Right? So you got a nice bullish candle after the correction. Nice bullish candle. Came back, wanted to retest it. That's fine, but then it recovered a bit. So that's my play. Is there. But you know, from your daily, this is going to be my C from a higher time frame perspective. Then it's like, oh, this is just getting going, because ultimately my D extension on my daily will be here. So what I'm telling myself is that, I'm gonna link that down to the lower time frame. What I'm telling myself is that I've got potentially, if my bias is right, over 1,200 pips of bullish potential. I can either enter my initial position in my sweet spot, small order, like this. Okay. Small order. Oh, that's in my sweet spot. I'm putting in a small order there, 0.25%. And then you can go down to your lower time frames and say, so if you look here, here's my initial order, buy limit or whatever you have in place off your daily, because I want to identify my low price on my daily if I can. Then look, here's that initial order. Now I got a pullback. Now I got another 0.25% in there looking to get long, right? Wherever you put it at, 61.8. I like 61.8, 786s. Boom. So now I'm 2 orders in. 2 orders in. I got a pullback I'm adding. And then, you know, hey, I've got potentially over 1,200 pips of bullish buying potential. Just like that. That's how you do it from the top down. And you start to set some targets. So you got your smaller intermediate targets, then you got your longer range targets on these fibs. So as long as that keeps making A, B, C, D waves to the upside, now I can move sideways. You're gonna have fibs that make deeper corrections. But as long as I'm still moving to the upside ultimately, then this is my long-term target. Just like that. Everybody follow me on that. Drop me a 3 in the chat. Awesome, right? Hang in there long enough, you'll get it. So that's where we are. So we'll see if that plays. Now, if you're planning off these shorter levels and it pushes deeper into your daily zone, like this, and it decides it wants to correct even more, oh man, something else bad happened. And definitely, right, the yen strengthens because of the risk-off scenario, then hey, maybe this thing pushes down to my 786 level. Well, if you're using these smaller fibs, guess what's going to happen? You're going to get stopped out. But guess what? That's okay. That's trading. It is what it is. No way around it. It is what it is. No way to avoid it. Stick to your trade plan, stick to your rules, because that's what gives you the edge in your profitability over time. All right. So we can't be scared of pulling the trigger and potentially taking a loss. That's the game. That's the game. All right. So that's the NZD JPY. And yep, you'll watch it again. That's cool. That's cool. I got here. I'll save that. You're welcome. I will see. I can do it. Somebody, and we'll close out. Somebody give me a pair. Give me a Forex pair. Take the first one. Euro JPY. All right, it is what it is. So let's look at the Euro JPY. We're not even, so that's the Euro JPY. So, okay. You new to Smart Trader, you're using a demo. The first thing I like to do, now I have a pro version, okay? I've had it for years. Had it for years. So I have different options, but this is how I go about it. So when I want to add a new workspace, I click add the workspace, and you want to put the name in there. And so I'm going to use EuroJPY1 because I already have a EuroJPY chart. And then you have to get the symbol. Now, what got me in the beginning, I was calling Smart Trader support, saying it doesn't work and all this other stuff. I had typed in EuroJPY like that, and I couldn't find it. But what you have to make sure you do is the way they have it formatted. You have to check EuroJPY with the slash. Boom. And then I'm going to make this. Hold on, everybody. All right. So then I'm going to make this my monthly chart. I just try it like that. And then I'm going to click add. So I've got a new workspace. This is my monthly workspace. Now, my monthly and my weekly chart, I'll use it in the same window. Okay. But when I get down to my daily, my 4 hour, my 1 hour, 15, 5, and so on, I like to use different windows for that. So in my package, depending on the package that you have, it'll give you different options for how you want to manage your charts in your workspace. Okay. So this is my monthly. And what I want to do is I usually take this one here. You can use the 4. If you have a 4, if you can manage 4 layouts, then you do that. So we'll do 4 because I know some people have a plan where you can do 4. So what you can do is this. All right, you guys got a few minutes, drop me a 1. I want to make sure I get through this. If not, I can cover it during another session. Okay. I know we're running over. So, all right. So this is going to be my monthly chart, but I'm going to make this my monthly and my weekly. I'm going to make it one and the same. Okay. Then I'm going to make my daily chart like this. Okay. That's my daily. And then I'm going to do, I'll do a 4 and we'll do a 1. Okay. And you can work this however you want to. If you're more of an intraday trader, you like the 15 and the 5, then start out with your daily and work it down from there and whatnot. So this is how I like to do it. So now I've got my monthly, my daily, my 4 hour, and my 1. Okay. So I'm going to use the monthly and the weekly on the same chart. So what I'm going to do is come in here and mark these levels. Like so. We always, just for good practice, because it was the way I was taught from the very beginning, mark the extreme high and the extreme low to frame out the chart like that. Okay. Just like that. And then this is the extreme low of your chart. Okay. Easy enough. Then Smart Trader makes it easy. Now, if you're using TradingView or something like that, that's fine because we teach you all about the swing highs and the swing lows to mark your support and resistance. But for speed, and the reason why I like Smart Trader is because I'm going over all the pairs over every weekend, and it helps me to speed up the process. Okay, so smart resistance, smart support, and all that's doing is tagging the relevant swing highs and swing lows. So then you just color code it. So for my monthly, I like using a black dash dotted line. So I'm just going to take some key levels. Now think about it. This is the monthly. Each candlestick is a month. Okay. Just like that. And you don't have to get them exact to somewhere because we know that the lines represent what? A zone. Okay. We'll do it. And you don't have to take all of them, just doing it for good practice, right? So we can see it. Two most relevant ones are this high and this one here, this low. Now, I'm gonna use the monthly and the weekly chart in the same chart. So all I'm gonna do is go up here to this top part right here, and I'm gonna change this down to the weekly now. Boom, just like that. Weekly chart, lower time frame chart, zooms me in, gives me some other levels. So what I'm going to do is I'm going to mark this in blue. I'm going to use a blue dash dot for my weekly. just like that. See, you got your monthly one there. Okay, so we're good. There we are. So we got another level that snuck in right here. So that creates a good zone. Yep. So I'm gonna show you how to carry it to the windows. So now this is my monthly and weekly levels. So what I'm gonna do, okay, is I'm gonna now take off my smart support and my smart resistance. Now look, that's a nice clean chart. Okay, it's nice and clean. Everybody can see that. Now, what I'm gonna do is I'm gonna right click again, right click on my mouse, and I'm gonna say link all objects to the lower time frame. Okay, now what you have to remember, say I ran a fib on here like that. Okay, ran some fibs. You don't want to leave those on there when you're linking to your lower time frames. You only want to take your support and resistance levels. I don't like taking my trend lines or anything like that because the technology trend lines get thrown off and stuff. So don't do that. Just take your levels down. So I'm going to right click and I'm going to link all objects to the lower time frame. Boom. So now my monthly and weekly levels just went down through every chart that I have. So if I come to the daily, now look. There's the levels. Everybody get that? Drop me a 1 in the chat. That's on every level now, right? It helps me with the speed and getting in and out of my chart work. See, it's on every level. It's on my 4. It's on every single level. Now, when I get to the daily, I'm going to catch these levels. Right? We can see the swing highs and the swing lows. Look, boom. Here. You'll see it. Now, smart resistance. Okay. Smart support. Easy enough. Now, smaller waves, more levels. So for my daily, I use red. Now, I don't want to continue to link at this point all objects to the lower time frame because it's just going to send my monthly and my weeklies that are already on my lower time frames. I don't want to do that. So from this point, I'm just going to do it one at a time. So I'm going to put this daily level in like so. I'm going to right click and I'm just going to link object. It's going to link object. Now, let me show you something. If you have this tool on here, okay, which allows you to draw, right? I like to call it the connector tool, right? Where I can just go like that. Okay. If you have that on, if that's active, when you right click, it's going to only give you link all objects. So if you ever have this on, make sure you turn it off because now look, I can click on this and it'll say link object. And I'm just going to take that level to the lower time frame because I only want the daily level now to go down, not my weekly and monthly again. So I'm going to boom, lower time frame. I'm going to come in here like that, right click it, link object to the lower time frame. Take this level here, link object to the lower time frame. That's all I need right now. So again, once I do that, I'm taking these off. And the reason why I use my lines and I put them in over top of the smart support and resistance levels, because when a smart support and resistance level, when it breaks it, it disappears. I want to keep those lines on my chart. Okay. So now that's what we look like from the daily. Hey, swing highs, swing lows, chart moves up, down, and sideways. That's it, everybody. That's it. That's all we're doing. Anybody can do this. Each and every one of you on here can do it. Okay. So that's what that looks like. Now I'll go down to the 4 and you see all my levels are there. All my levels are there. So if I never knew anything about a fib and I just knew price action and structure, look at that. Lower low, lower high, lower low, lower high. Structure to the downside, right? Now, this here, see how that's kind of how that did that like that? That's because you've got two highs that are close to each other. And the rule with your trend line is 1-2 touch and straight through. Okay. So see if you go here like that. See how it's doing that? So what you have to do still is manually know how to draw your trend lines, because the technology always, right? There's always caveats to it. So you can take your rate tool like that. Now, when I'm drawing my down trend lines, I always use blue just to have good habits and fundamentals on your chart. When I draw my uptrend lines, I always use red. Okay. Try it just like that. Look, here's my first touch up here, and you want to extend it out until you get the second touch. The second touch is right here. It's 1-2 and straight through. We do not draw through candlesticks. We go over top of the wicks. We don't draw through the wicks either. So that's that. Now, that's a conservative trend line, right? Now, if you want to be more aggressive, you take it from the second touch like that. But this actually would be like that, because this is your lowest point. You're trying to get to the lowest point. Okay. So this is your trend line that's going to work the best right here. And you could drop down to your lower time frames and play that one. But if you wanted to catch the trend line in a reversal like this, I'll show you. Because you want to get down through the lowest point of the directional change. So you see here how this was the high, and then we pushed up, and then we pushed down. Right now, in this price action, this is your lowest point. Okay. So technically, this goes like this. Here's my second touch. Here. Here's my second touch here. And straight through. Like that. And then you want to map them out through your lowest point prior to U-turn. So then it goes like this. Look, 1-2 straight through. Now, here's where it touched last. Boom. See that there? Here's the touch, second touch straight through. That shows you exactly where you had your reversal. Hit support, boom, straight up. That's how we know how to, especially on those lower time frames, to play those tight setups, those high reward to risk setups. And we put our stop below the previous low prior to the U-turn and the trend line break, and here's our entry. So you want to get consistent at drawing your trend lines. Boom. Okay, like that. So that takes some practice. All right, but that's how that would look. And now we've got a bit of a sideways push on that. Okay. Right. Look, support to resistance. Right. Look how things start to come together. Right? If you wanted to play this reversal in this swing, see how that's making up ABCDs now like that. Okay. So many different ways that you could play it. Let me back. Make sure I got that right. Just double check. I hate when I move my trend lines. Okay. There we go. All right. So that's the way you can spot a trend reversal for a setup like this. Okay. But we've got a structured downside move, right? Lower lows, lower highs. So if you didn't know anything about fibs or anything like that, you guys can see that. Look at the break, pushing back up, retesting, break, pushing back up. Everybody can see that there. So now you're like, man, this is a critical point on this Euro JPY. Okay. Critical point. So you can see here where, look, past resistance became future support, became support again. Now, if we push up and this holds, then we can get a position where price can come back down and finally break that level. Okay. So look, see? So after you learn the price action and the structure, then you can dress it up and put the tuxedo on it, right? Being the fib. But in the beginning, You just want to learn how to draw your support and resistance in your trend lines. Right? Look at the break here. Up ABCDs, down ABCDs. Boom. Right. See that? Trend lines, direction, speed and momentum of the market. When you look at the angles of trend lines and how steep they are, how shallow they are, and then potential entry points. Okay. That's why it's important to learn how to draw your trend lines, right? Because if you watch this price action move up and then I get that break of that trend line, I'm taking that. And then I can put my stop right above my high. Yeah, that's a solid trade. Just like that, you found a setup. See? But it all starts from knowing how to set your charts up right. Now we're all the way down to the 4 hour. And we've got all of these levels. And now, depending on the type of trader that you are, if you like trading on the lower time frames, you may say, I want to throw my 4 hour levels in there. It's the same exercise. It's the same exercise. So look, now is those supports. Okay. The lower you go with your support levels, the busier your chart is going to get. But if you like small setups and things like that, I use purple for my 4 hour. 2 tight ones here. It's going to become a zone like that. And I'm going to link this down to my 1 and below. See? Now, from the daily down, I'm just doing a 1 at a time. See? Right click. Lower time frame. Just like that. Okay. And if you want to say, hey, I want this 4 hour one up here, however, whatever you want to do, however you track it, you link that one down. Take these off. Now I got some levels. Okay. Let me put in support. You got support all below here. So that's going to be a decent little zone. And you come down there, you guys get the picture like that. So now what it does, it's kind of like a Ichimoku cloud. The whole point in the cloud was for you to be able to look at one chart at a glance and be able to tell, am I trending, am I not trending, am I bullish or am I bearish, depending on whether price action is above or below the cloud. What this enables you to do is whatever your favorite chart is to trade on, say it was my 4, I'll know where I'm at in regards to a higher time frame support resistance levels. I know where I'm at through all of my time frames, daily, weekly, monthly, on my 4 hour chart because I've got the levels. So I can just click on my 4 hour chart and look, and I know where my higher time frame levels are, just like that. So if I want to go down to my 1 and like trade number 1, all those levels are there. If I like smaller, faster price action, all my levels are here. Okay. See? And you can develop your trade ideas from that. So that's your 1 hour. The lower the time frame you go, the more you're just zooming in. So that's it. That's how you move down through your charts. Now, if you wanted to take your 1 and drop it to your 15, that's your 15. That's your 15-minute chart right there. Your 5. All your levels are down to your 5-minute chart. So you always know where you are. Okay. And you can see that no matter what time frame you're on, the market moves in waves. Right? Looks like a head and shoulders. Yeah. Yeah. Potentially. See? That's it. Score a point. That's it. That's it. So now you guys know how you use Smart Trader, right? And link your support and resistance levels down through your zones. And that's how we find the prime setups. Any questions before we wrap up? Hopefully, I hope that helped some of our newer people.
Yeah, thank you. That helped a lot because I was basically trying to link 4 different pairs in one workstation. but it seems to be like,
Oh, okay.
right. That was confusing. I'm like, where's all my pairs go? I know I saved this here, but it's
Yep.
like one workstation for one pair. How many different time frames? I got it now.
Yeah. So it really, and then something, depending on the package that you have, it has its limitations in regards to amount of charts that you can set up. But you can see here, I'm always, so every week when I go through, that's how I can go through my chart so fast. So if I want to scroll down and look at something like the S&P 500, it's already there. So my levels and everything are already there. You can see this thing is just running to the downside. So the levels are already there for me. See, and the only thing that's going to happen now, I do, I think I'm down to a couple times a month now. When I was new, I would do it every week because I was trying to learn how to do it. But now, every week, so probably twice a month now, I'll clear everything out on every single pair and redo it for good practice. That's just the way I was taught. But in between that, it's just a matter of going through your charts to see if there's any new levels that's been created, any new swing highs and swing lows, right, that have created new support and resistance levels because the market moves in waves. But we've had this S&P set up forever. You just let it run. This is what we mean by setting things up and let trades fall in your lap, right? So every single currency pair, whatever, if you're in the indexes, even if you're using like a trade view or anything, it's just good practice to, this one's still moving around sideways. That's probably gonna do there for quite a bit. But now you could just, as I say, even if you're using trade views, just good practice to do it like this, because now if you're busy like I am, all I need 15, 20 minutes throughout the day to go through to set up, to see what my setups look like. Is it there yet? Nope, I go to the next chart. This is where I needed to be. Nope, I go to the next chart. And that's it. And that's how you really can get in a good habit of swing trading. So all the work is done on the weekend when the market closes. Set me up for the next week. And that's how we can find the high potential setup so quickly. Is because it's the same chart. Like we've had this oil chart set up forever. Right? This has been set up for quite some time, and we've just been watching it run. So you see where the original box was drawn. Just the reward to risk was drawn, and look how much has moved since then. Right? It moves from left to right, and so we've just been letting it run. So every time we click on the computer, you have a plan. You're not just, what can I find? That you run into trouble like that. That's a tough way to trade. And then you're turning it into a full-time job, which you don't have to have it be a full-time job to make full-time money. You don't, right? That's not why you're looking to trade. You already have a job, most of us. So that's how we do it. No real magic behind it. It's just a systematic approach. You just need a system.
Thank you.
You're welcome. You're welcome. Any other questions before we wrap it up? They do not have a risk to reward tool. I have emailed them about that. I would be so happy today that they add the risk to reward tool. You're talking about the position tool, like on TradingView, like right here on TradingView. If you were taking your long and your short position, right? So if I was taking a long here, it automatically just calculates it for you like that and puts you in your 2-to-1 scenario. Yeah, I wish they had that. I wish they had that. So there's pros and cons to each setup. There's a lot of things like I think this is absolutely dope. So I'll show you guys something real cool. Like you could go. Let me go. Let's do a GBP USD. And we'll look at Forex. We'll take it like that. And I like how they have where you could do like your bar replay tool, and you could just simulate through your charts. I like that. Hopefully Smart Trader gets that one day, and it can just simulate through the price action, so you can kind of rewind the candles and move it forward. So I think that's pretty awesome. Yep. get your highs and lows set up on TradingView. Yeah, I think that's cool that you have them set up like that. And then Casey, she has some YouTube videos where she'll show you, do you label your highs and lows? Like, this is my daily level, because you can label them, you can do all types of stuff, and save them. So both platforms are really cool. I like Smart Trader. I was trained on it. It's I can use both, but it just helps me. The smart tools and the smart functionality helps me to get through my currency pairs so fast when I'm marking up charts. So that's why I like it. It's a great tool. And if you're a fib trader, you can't beat the smart fibs. That's a really good feature. So, but yeah, everybody's different, to each their own. But that is it for tonight's session. I hope everybody was able to learn a little something. Hope that helped out for sure at the end, especially for our newbie traders. But that's it, closing out the week. Continue to watch for some of those setups that we talked about. And we'll see everybody bright and early, 7 a.m. Eastern Standard Time, Saturday morning for the Forex Weekly Ritual. Have a good evening, everybody.
Thank you. Good night.
You're welcome. Good night.